This session, we're now in the moving along in the client journey phase. This session will talk about the client journey and the use and the regular use phases of that journey. It's going to take a look at why mass take-up is not always followed by regular usage and long-term client retention. We know about opening of accounts, but we also know a lot about dormant accounts, and this will address some of the issues that are related to that. The work in this area tends to revolve around purchases, which of course is a one-time decision, and the difference between that and repeated usage, which is of course repeated behavior. Regular usage is repeated behavior. What are the differences between the two, and what stimulates one or the other? The panelists here are going to be offering insight into their own experiences and the experiences of their organizations in meeting the challenges of improving regular usage. How do you move from just a single act of a purchase, if you will, opening an account, to regular and continued usage of that account? Katie Martin is going to be moderating this panel discussion. She is the Managing Director of Ideas 42. For those of you who aren't that familiar, Ideas 42 is a nonprofit consulting firm and a design lab. It uses insights from psychology and behavioral science and behavioral economics to help solve social problems. Much of the work looks at how programs and policies and products can be adjusted to change people's behavior. And of course, if we change behavior, we're seeking to improve outcomes. So Ideas 42 works across a number of sectors, a number of different sectors, and they work in a number of different parts of the world. But interestingly enough, increasingly, they are looking at financial inclusion. So I think we have a very interesting topic ahead of us now. Katie, panel is over to you.
Thank you very much. So thank you for coming to this session. I know it's late in the day. I'm sure you've heard lots of different things today and yesterday, and lots more to hear tomorrow. So we really appreciate you being here. So as we've talked about, this is all about usage and regular usage, which is absolutely essential when we're talking about financial inclusion. We want people to use the products. We want people to have a sustained sort of pattern of behaviors that means they can get the most out of the products that we're offering to them. And this is a really important part of the five-part framework that Bob set out yesterday. In fact, 2 of the 5 elements involve usage. So we saw that it was engage, buy, use, share, and reuse. We want to make sure that the use and the reuse is really coming into play. And this involves a really close look at behaviors of our consumers. How can you translate that one-off behavior, whether it's signing up for a savings account or joining a particular scheme, into this kind of repeated, ongoing action that will create the outcomes that we want to see. And that's where Ideas 42 kind of comes into it. We look very, very closely at behavior, at psychology, to try and understand some of the behavioral bottlenecks that might be preventing some of these actions. But obviously there are a whole range of different problems that might be coming into play, and they're the kinds of things that we're going to be talking about today. So just to kind of help us make this problem tangible, a really obvious example that we've talked about is signing up for a savings product, but not actually using it, whether that's using it at the beginning and then it becomes dormant later, or never actually making a payment. I think we can also think about it in terms of our own lives. I mean, I don't know, I suspect I'm not the only one here that's signed up for a gym and only gone a couple of times and then kind of kept the direct debit coming out of my account but never actually used it. So clearly not acting in my own best interest there, but we're all kind of fallible to these problems, or susceptible to the problems. So I'm joined on stage by 3 very well-informed panelists who will talk more about their own experiences. So we've got Lara Gilman, the Senior Commercial Manager at GSMA. So Lara works in the mobile money for the unbanked team, and she looks specifically at how to scale up mobile money services. Zung, not going to pronounce your surname. Thank you. I did try earlier and it was just not going to happen. Consultant at Red Associates in New York. She works on tech, healthcare, and particularly in emerging markets. We have Torres from the Philippines. She's the president and CEO of Card Bank. And Card Bank provides a range of financial products to specifically low-income women in rural areas, so a fairly distinct group of people, although a very large one. So we're hoping this is going to be a fairly interactive session. We'd like to hear a lot from you about your own experiences of problems with regular usage and some ideas and suggestions for how you've solved those problems and think they can be solved. But before we move on to that, I do just want to put a question to you guys. So you're all used to using your clickers by now. We have a question up here for you. So which of the following do you think is the biggest challenge in terms of translating purchase into regular usage? So probably accept that all of them can be a challenge, but what do you think is the biggest? Votes. We need a few more than 12. I'm getting there. Oh, 47. We must be nearly there now. Some people are thinking about this very hard. Okay, do we have an answer? Fantastic. Interesting, a clear winner. Not enough knowledge of what the customers want. I think that's, I wonder if that would have been different if we'd asked this question at the beginning of yesterday. But that's really interesting to see, actually. We all recognize that there needs to be a greater knowledge of what the customers need and want, what their behaviors are, what's going to create these behaviors. Does anyone just want to put their hand up and talk a bit about why they've chosen a particular option? Don't feel compelled. There'll be plenty of opportunities to contribute later. Okay, that's fine. So what we're going to do now is we'll come back to this later on, and I think you'll see how some of these challenges have been sort of addressed in some of the problems, but we don't want to give too much away now. What we're going to do is hear from each of the panelists about the specific problem that they've faced in terms of either working themselves or with a particular client to help them promote regular uptake. So they're going to talk a bit about the context of the problem, a bit about the background, and then just in a very descriptive way kind of explain or describe the behaviors that they were seeing and the behaviors that they wanted to see. So we're going to start with Lara, I think, just to spring a surprise on you. Do you want to talk about your problem?
I'm sure I have many, but I'll stick to the professional ones at the moment.
Probably a good idea.
So I work at the GSMA, so it's interesting because we've got a really diverse group up here, and my perspective is going to be slightly, probably a little bit different than perhaps my fellow panelists. At the GSMA, we take a really bird's eye view, and we work with operators across a number of markets. And today I kind of want to talk a little bit about what's happening, what we see as a common story. I spend a lot of time celebrating the success of mobile money, and I think that we can't do that enough because we are now at a place where we've got 200 million customers who are using a wallet globally, and we've got about 60 million who are active. Okay, that's a little low. So lapse usage is definitely one of the challenges that is persistent. So my kind of current situation right now is thinking of one particular operator who we had kind of touched base with and heard from, and they launched a product which was kind of a classic model. They were driving, they thought there was a really clear corridor from urban to rural. So they're really targeting that P2P value proposition, which is something common that we see. They did a big bang launch, and a couple of years later, they had lots of registered customers and not that many users. And we started to sort of think just a little bit around, all right, what do you guys think? And they said, listen, quite frankly, you come to us and you're bringing some insights, and that's great and helpful, and we're doing a lot of those things, but honestly, we're not Kenya. And Safaricom M-Pesa was a blip. It's great, but our customers, our market's different, and our customers aren't ready to give up cash. So that was kind of the scene that was set for us, and we'll leave it kind of right there at the moment, but I think the important thing is that they were committed to this. They did feel like this was an important business, but nothing was happening yet.
Okay. Zung, do you want to explain a bit about your problem?
Sure. Let me spend 2 minutes explaining a bit more about who I am and what I do. So I'm part of Red Associates. We're an innovation and strategy consultancy that operates out of New York and Copenhagen. And our kind of take or approach on solving the type of problems that companies give to us is we believe in a qualitative one. So we don't really do surveys or rely on industry best practice or largely quantitative data or net user ratings or other type of metrics. And what we, the core of what we believe in is really going out there and not only just talking to people, but spending half a day with them, observing them while they're working, while they're consuming or playing with friends or whatever it is activity that we want to understand, to get really behind the needs and aspirations that we talked about before that can be really difficult to grasp. And a lot of times if you just ask people, they aren't able to articulate themselves. So the case that I'm going to, or the problem that I'm going to present you today is not one necessarily within financial inclusion. It's about pension funds in Northern Europe, or more specifically Scandinavia, which is a market that is fairly financially included. Even though I'm from Vietnam. But I think that some of the findings and problems are relevant to a lot of you here. And so I think we all know roughly how the pension fund model works. Once you start working, you put a lump sum savings into the pension fund each month, and you get interest on it. And when you retire, then what you will get is a check every month, or depending on what the agreement is. And so the client that we were working with is the largest pension fund in this Scandinavian market, and it has about 5 million customers, and it has really succeeded in making itself the default for especially private company employees. So whenever, especially new employees, whenever you start a new job and sign up for a pension fund, this is likely to be your first choice. They have 30% of the market, and there's another big competitor, but other than that, it's usually just very small, like niche institutions, so like the teachers union pension fund or firefighter, or like small funds that target very specific groups. And so since we've been talking about high touch and low touch before, and what my opinion of the previous debate now that I get to give it is that there always needs to be a combination, and our client also had a combination model between consistent low touch. So every month, many of you will be familiar, every month you get an email saying that this is your savings so far, this is how much you have in your fund, this is your interest rate, this is how much you get, and maybe this is your projection. And then what they have done is invested a lot of high touch interaction at the beginning, so to get at customer acquisition, really teaching people who are just new to pension funds or like signing up for the first time about what it is, what their future will look like, what are their options, etc., etc. And they've really dominated and become successful in being the default. Now, of course, similar to everywhere, people change jobs, and with each job might have, the employer might be signed to a different pension fund. So according to their data, on average, by the time people retire, they have 6 to 10 accounts at different pension funds. And what had been happening in Scandinavia in the past 10 years was a wave of deregulation, where they made it a lot easier to transfer money from one fund to another without being penalized. And so what our client had been experiencing for the past, maybe from a decade, but slowly growing, was that there was a sharp dropout rate. So from about 10 years from before people retire, so from when people start to turn 50 50, 55, they saw a huge dropout. So what people were doing were pulling money from our clients' pension funds and putting it into other people's pension funds. And they were losing about 20% of their customers yearly in this overall, but mostly in this age group, so 50 to 55 to 65, so 10 years before they retire. And that's a huge retention problem. And the question really was, why was that happening? They didn't know why. And what they wanted to do was decrease the churn. And they had some sort of vague idea that to do that, they wanted to increase engagement and somehow create loyalty. And thinking that if the relationship between them and their customers were better, then people would drop out less.
Okay, so we're moving on to solutions here.
Right, we're moving on to solutions here. And I'm not going to give out the solution, but I guess then the question is how, not only why, but also how. So how do you know where to put high touch, where to put low touch, and what messaging? So that was the problem. Oops, shouldn't do that. That was the problem that we were given.
Great. Thank you. Dori, do you want to talk about your experiences in the Philippines?
Yes. Good afternoon, everyone. I think what I would like to share is a unique journey because I'm a practitioner directly involved in understanding the women and their needs. And as you know, the story of card started with the 20 pesos. And we used the 20 pesos for buying bond papers where we typed the proposal. And that proposal was granted by a Japanese NGO. We lent 1,000 pesos to a woman to start the credit and savings program. And that 1,000 pesos, that's barely 25 US dollars, is being repaid on a weekly basis with very strong discipline. And at the end of the first year, we had only 89 women who were really attending meetings and paying at 100%. We told ourselves that is what we needed, but at the same time, when we formed CARD, we dreamed of establishing a bank that will be owned and controlled by the women themselves. So after 10 years of operating as an NGO, when we have less than 100,000 clients, we approached the Central Bank of the Philippines, told them about our experience, showed our records, and tell them we are willing to test of putting credit and savings program, now termed microfinance, in 1996, and under a regular banking structure. Of course, we have many apprehensions at that time. The central bank people were so shocked that a small NGO like CARD would approach the central bank and apply for a license. When we were granted a license, we thought that savings will come automatically because we have a bank. In the Philippines, only institutions with bank can mobilize deposits. That's why the option that we took was to ask for a license is for us to mobilize savings. And when we had the license, savings is not coming. I was also fortunate that before we became a bank, I was enrolled at the Boulder Institute. I attended a course that prepared me to become the CEO of CARD Bank because when I attended, I was the executive director of the NGO, and we thought that I need something to widen my perspective in terms of banking. So I was fortunate to attend that. And during one of the conversations with the professors, I remember it's Margaret Robinson. He said that savings mobilization, a true savings mobilization can turn your institution upside down. And I said, what does that mean? Oh, you have to do a lot of re-engineering, improving capacities, maybe the staff has to be prepared a lot. So those were words of wisdom that I remember, and one of the best takeaways I had from the Boulder Institute. And then in order to understand the savings mobilization, because we were good at giving loans. In fact, when we became a bank, our repayment rate is 100%. So the central bank, who was shocked, was also shocked to see our records that we got 100% repayment rate, even though we don't take any collateral. So going back to the challenge in terms of the savings mobilization, which we would like to address because we don't want to waste the license that we are a bank. And we do a lot of quick surveys among our clients and among the general public, because as a bank, we have to open the services not just to our existing clients, but to the general public. So we did several quick surveys that really told us what the clients need. Shall I stop in the solution? Or
if you want to talk a bit about the actual behaviors that you weren't seeing that you wanted to see, that would be fantastic.
Yeah. So it took us a whole lot of savings mobilization, and Grameen Foundation helped us in the journey. So we studied what the clients want. We looked at the results of the surveys, and to give you an example how they regard an NGO turning into a bank is, I don't want to make a deposit in your bank because when I kick your door, your bank is already open, my money is not secured. So they value security. So we have to do something about the facilities, as we cannot become a good bank if we retain an office in a small house where our staff sleeps. We have to have security guards, etc. So we have to do like that. And
we are getting into solutions a little bit, sorry. So I am going to stop you there. I mean, so just to kind of summarize the three different problems. Lara, you talked about the fact that people were signing up for a mobile banking service. Mobile money service, expressing an intention to use that by signing up, but then not actually using it. Yours is a slightly different problem because it was more about retention. So they had joined a pension scheme, had kept their money in it for a long period of time, but then they were making a decision to move it. Is this right? And in your case, Dory, it was you offered a new savings product. People were actually taking out that savings product, but weren't making regular deposits. Am I right in all of those summaries?
Exactly.
Fantastic. Great. So now what I'm going to do is turn over to you guys in the audience. I think what we'd love to hear is a little bit about any problems that you've faced around regular usage of products that you've already successfully sold, and your experiences of increasing uptake, any thoughts you might have on these particular problems that we've heard about, any thoughts on how they could be solved as well. And then we'll circle back at the end and hear about how these guys actually addressed the problems that they faced. So would anybody like to open up the discussion? Okay, gentleman just down here. And feel free to ask any additional questions about these particular problems as well if you would like to hear more.
Hi, thanks. Paul LaRue from South Africa. There's many ways we can do it. What we've tried to design, because we are what we call an EDLP player, everyday lowest price. We offer certain products, financial services products, which is basic products like money transfer, bill payments, all those great things. But what we also try to do is that when a customer walks in a store, that EDLP price will apply. However, if that customer do the same thing, just do a deposit into our account, but do the actual product on the mobile outside of store, then there's a discount or a reduced, even a further reduced price. So by doing a variable pricing methodology, we do that. We get the right results. Other things we also try to do, because airtime is so big in South Africa, when a customer walks into a store and you want to do a deposit into our account, which is a fully bank account with mobile access, he doesn't stand at the counter and deposit money into the account. When he want to do deposits, he come and buy what we call a token. And token is like airtime. So the moment when he bought that token, which is a transaction, takes us about 3 to 4 seconds. That customer walk outside of the store and deposit that token directly via his mobile. So by doing that, we encourage mobile usage, and by reduced pricing on that mobile channel, we encourage the customer to do more products via the mobile 24/7.
And so how's that, and that obviously makes it very easy for people to take the action. Do you think that's what's resulted in regular usage? Or do they have particular prompts to kind of remind them to take that action on a regular basis?
Yes, different things apply to different customers. And I'm glad the forum discussed about acquisition and retention. So acquisition, as we've explained earlier, is through our dynamos. Our dynamos need to get the product, they need to understand it, they need to use it themselves. And that's why with every new product, we will never launch a product unless our 12,000 dynamos don't have the product themselves and do comply to all our key metrics. If it doesn't done, we go back to the drawing board and redesign our product. When we go to retention again, our dynamos will go back to our customers and say, do you know what? If you do that particular transaction outside of store, you don't queue up my till. You don't have to store in the store and wait in that queue. You can go outside of that store and do that transaction 24/7. And Mr. Customer, next time, you don't even have to come into town and pay your taxi fees. You can do that transaction at home, which is more convenient and much more cost effective.
So this is about simplification and ease of use to promote regular activity, to summarize. Okay, anybody else? Huh? Yeah, is somebody from Micro-Insure here? There we go. I understand you've got some interesting insights to share.
Yeah, my name is Ishmael Ochi from Micro from Ghana. I want to Dolores to share her experiences in the transition from the NGO to a full bank, because normally if you are a bank, the type of regulation that you have to go through, is very, very stringent. The central bank will want to look at your governance, we want to look at your internal controls, we want to look at your liquidity, capital adequacy, a whole lot of indicators that you need to meet. How did you manage that? You may also have to talk a little bit up, even your costing, because now your pricing is going to increase. As a bank, you need to incur additional costs in terms of other infrastructures, additional infrastructures. You need to even get full security. All these are going to add to your cost. How did you manage that?
Do you want to answer that?
Yeah.
Yeah.
Can I answer that?
Uh-huh.
Yeah. The whole transitioning of the bank, or of the work as an NGO to a bank and the formal structure, has also been a meaningful journey for CARD, because we're taking the heart of an NGO into a banking structure, and we have to prove to the central bank in the Philippines that we can become a banker with the heart. So first, we have to lobby why our loans are all unsecured, 100% unsecured. They told us, your loan must be 70% collateralized. And we said, but our repayment rate is 100%. Where do we use the collateral for? So they look at our records, they look at how we are getting the 100% repayment rate. And at that time, we're following the Grameen Bank scheme of weekly meeting, where repayments are coming to the weekly meetings. I brought the examiners there for their own orientation on how a 100% repayment rate among very poor women can be achieved. And the examiner was so surprised when he attended the meeting and he saw money is coming into the middle of the table, voluntarily. It's inserted in the passbook of the clients. And I think that was what the Bangko Sentral needed, an assurance that clients, even without collateral, will pay. So after that, we had series of sessions and training, orientation, where we trained the examiners of the Bangko Sentral. As a result, the Bangko Sentral established a microfinance unit in order to assist microfinance-oriented bank like Card Bank. And after that, several circulars have been issued, and they really reformed the banking regulations and the banking laws in order to be very supportive to microfinance or microfinance-oriented banks like Card Bank. And so other microfinance institutions became positive in becoming a bank also. So some followed, the others are in process. So
you led the way.
Yeah, so, but you know, it was very scary when the examiner came and said that our loan is substandard. He said, I can't accept that because we're getting 100% repayment rate every day. So how can that be substandard?
I think we'll move on because this is slightly away from the subject of regular uses. Maybe we can carry on this conversation over cocktails in an hour or so. But that's still, no, it's fantastic to hear, and I think you answered the question really well. So just bring it back a little bit to problems around regular usage and the problems that we've heard here. I think the gentleman up there would like to, over there to my right, your left.
Hi, I'm Peter Gross from MicroInsure, and insurance is one of the classic kind of cases on problems of usage and customer retention. So, you know, essentially, if you're poor, you face risk every day, but you're really going to pay your insurance premium once per month. And so the insurer has a very distant relationship with you. And so we've really overcome that in a couple of ways. One is that we have had others pay for insurance. So we work with a lot of telecoms, banks, and other aggregators to provide a business case such that reliable, useful insurance is then of interest to clients who take the product for free. The aggregator pays for it, and so that overcomes the premium payment and client retention problem. So our retention, of course, is 100% because who doesn't want something for free? But then once we give someone the insurance for free, they see that it works, and they see that claims are paid by the thousands. And in Ghana, we have a product with Airtel, has 600,000 clients in 6 months, and the average claims payment is within 78 minutes. And so that's another element of usage, that people see it, money comes very, very quickly to your phone. Once we then get people on the free product, what happens is they then are able to pay a premium of the product they've already seen work for them for free, and the premium is paid on a daily basis, just 1 or 2 cents a day. So now they're actually paying for more of the service, and maybe it's a double your cover product or buy for a family member and so forth and so on. And so the premium retention is a function of the daily payment as opposed to a less frequent monthly payment that people would struggle to make, I think. And so that's been overcome that way, and the retention rates there are much better than we would have on a monthly premium. The third thing we're getting into now is actually where we're most excited, which is that insurance only kind of addresses the tip of the iceberg in terms of risk for the poor. They deal with risk in other ways. They deal with risk by educating themselves ahead of time so they don't have to face the risk. You know, so for example, if I get health information now, then I'm better educated about how to deal with health risks before the risk actually affects me. So if I can educate people and give them tips to cope with risk ahead of time, that might help them avoid insurance in the first place. But the third thing is actually gaming. So, you know, yesterday in the opening session, we talked about Pop-Tarts being, you know, what people kind of choose to buy before emergencies. Well, I love Pop-Tarts, not personally, but that's what people buy. So why do we want to fight that? Why do we, you know? So we have people play games, and so they get on the phone, and then when they get to our app, it used to be just kind of an insurance product. Well, now it's got insurance and tips that you like and games that are just fun. And all those things circulate in kind of the same place in your mind, which is risk. And so now we've got people that want to come to the app every single day to have fun, to have some information, to pay their daily premium, which is deducted from their airtime. And we find that that's a much stronger client retention tool, all dealing with the risks they face, whether in insurance or not.
Thank you very much. We have another contribution down here. We have two, actually. So let's go with the gentleman at the front first.
Thank you very much. I really appreciate the panelists, and I want to ask one question. Card Bank, you have been changed from NGO to bank, and yet your repayment rate is 100%. I would like to hear as to how you manage risks. I see there are external problems repeatedly happening in your country, Philippines. I also appreciate your people to face such unexpected challenges. Do you mean that even at time of difficulties, when external problem is very high, still what you say repayment rate is it 100%? Or I mean, for practitioners, it's better to hear about portfolio at risk than repayment rate. In any way, what did you do, and what supervisors, central banks do at time of difficulties when those catastrophe happened, and what was the behavior of clients, and is there anything that affected your portfolio? Thank you.
Thank you. Do you want to answer that? Yep. It's again slightly off topic, so let's keep it fairly brief, but it's a very interesting question nonetheless.
Yeah. In terms of managing risk, and especially at this time of the year when the typhoon is really hitting Philippines. There was just one typhoon to left and another one coming. But in November, there was very, very strong, the strongest typhoon that ever recorded in the world, hit our branches in Visayas region. As I have not mentioned that we have retained the card NGO as an institution, then we have card bank, and we have our own microinsurance mutual benefit association. So in terms of mitigating risks for clients or members who are affected by calamities, those major institutions are helping each other. So the claims for the rehouse, the life insurance of the clients affected are given on a 1-3-5 days time. First day, when it happens, claims are being distributed in the field. If not on the third day, then maximum on the 5th day. That was also a major change in the landscape of the insurance, on how insurance is managed in the Philippines. So now, because of that, the regular usage has been very strong. With our 2.5 million clients, we have 10.5 million insured individuals in the Philippines. And that comprise more than 30% of the insured Filipinos. Because we really changed how the insurance works, then clients are regularly using it, availing of the services, and are happy and contented with the service. But they also repay in trickles during weekly meetings, like 20 pesos, or in US dollar that is less than half a dollar. Less than half a dollar a week they pay. We insure the member, but also the husband. With the less than half a dollar a week being paid for insurance, we insure the husband as well as the children who are 21 years below. So it's like a one payment for the entire family. So in terms of calamities, that's how we manage risks. And of course, in terms of other risks, we have other risk mitigating measures.
Thank you. So the gentleman further back in the blue shirt.
Hello? Okay. So I'm David Cracknell from Microsave. I'm sometimes asked by our clients to help them drive more in deposits, both in usage and in value. And I thought I'd share in briefest outline an approach that I've adopted or we've adopted on occasions. Deposits is about delivering the right product in the right way to the right people. So there's a lot packed in that one sentence. One of the things I start off with is taking a look at how we're delivering our services to our customers. The institutions themselves know already where many of the problems are in their processes, their procedures, the way they do things. So we study how we're doing what we're doing. We spend some time workshopping that. We know then how to improve what we do. That's just one part of the puzzle. Unfortunately, deposits is a many-layered puzzle. The second thing we do is we take a look at the image of the institution and how the institution is perceived by its customer base, and we take a look at the typical customers that actually use the service. We do some segmentation. You'll find that in many microfinance-based deposit institutions, 90% of the customers are not doing much in deposits because they don't want their deposits in the institution that gives them loans, because they don't want you to sweep their deposits into their to repay their loans. So you've got a whole issue about trust and how you work. But you've also got an issue of who you're doing that work with. And maybe what you should be doing is taking a look at your existing segmentation information and seeing if you can't build the people that actually do value you. So there's a lot of work there in terms of who you're working with as depositors. Also you have to look at this sort of emerging area, which is how we do what we do in terms of increasing our ability to service our customers through alternative channels. And we've been talking about that over the last few days. And that's really integrating our operations through agency, through mobile, to basically bring our services at a lower cost closer to our customers. Now, if you put all of those things together, it can make a very big difference. We've helped institutions more than double, treble their deposit base. But it's not just a quick shot, one answer thing, because you've got to, generally speaking, you've got to work on all of these areas. Okay.
Brilliant, fantastic. Thank you for sharing that. We have one more comment down here in the middle. Go with the...
Thank you. My name is Rogers. I work with Hasal Microfinance in Nigeria. I just wanted to share, I experienced that when it comes to customer retention, that performance measurement and the direction you look at it also has a role to play. And my experience comes from how we describe size. Coming to the Boda Microfinance in 2012 and interacting with several lenders and funders, you find out that once you introduce yourself, the first question you get asked is, how many customers do you have? And you find out that organization would like to describe themselves from the perspective of how many customers they have. So you get your employees, like the question that was posed at the beginning, people want to describe themselves by the number of customers they have and not really translating that into number of customers that are doing business or that have been retained. So our experience after the Boda Microfinance in 2012, had to go back into strategy and said, what exactly is happening to our business? And we saw that customer acquisition was growing, but customer dropout was also growing at the same rate. And we had to say, no, this must stop. The idea is, how do you acquire customers and at the same time retain them into doing this business over and over again? And then we set up a team that we called Resurrection Team and said your responsibility is to restore all the customers. And we started talking to these people, and we have about 12 guys whose job is to call every customer who's dropped out to say, why are you out of business? And we found out that 80% said to us, well, after the first time, your people never came back to us. And we realized that we were concerned in customer acquisition rather than customer retention. And between 2012 and now, we've done a lot of work, and we're able to reduce the dropout rate, the dormant accounts, from about 55% down to 23% as at June 30. So I think that what you tell your employees about how you want to be seen, about how you want to be described, is very important in customer retention. The question is, what exactly is the focus? Is it that you are big, you have 2 million customers, or you have 500 customers, but they are doing the business every day? Thank you.
Fantastic. Thank you very much. We have another couple of people wanted to comment. Sorry, have you had your hand up for a long time?
Hi, I'm Monique Cohen, and I don't run an MFI, I don't run a financial institution, but I do worry about clients, and I worry about them a lot. And the question that seems that's on the table is, how do you go from adoption to usage? Because we lose, as we heard from the previous gentleman, a lot of people along the way. And then everybody says, we have to look at their needs and their wants, their preferences, priorities. I agree. But is that all we need to think about? So if you want a customer to stay, what you really want is loyalty and trust and confidence in both transacting and confidence in the institution. And we tend to forget about these things because if you take the example of digital financial services, we have to remember that for most poor people, what we're asking them to do is to leapfrog into the technology era and leapfrog into banking. They don't trust banking and they don't know technology. So we have to have a little patience and a little focus on how to give them the space and the time to experiment and learn by doing, and then they will answer the question for you, what do they need? Because they will figure out where the value of a product lies for you. And it is frequently not where you think it will be. People want digital financial services for very different reasons, depending on who they are. But they're not functional. They're not because they're a smallholder necessarily or a trader. They're because there's some personal issue that they find value in using them. So I would like to make the point and encourage the institutions to think a little outside the box, not what works for you, but what will work for the customer so they'll stick around.
Fantastic. Thank you very much. I think they've all been incredibly interesting insights. And some really good suggestions. And I'm now going to hand back to the panelists who are going to go, damn, why didn't I think of that? And they're going to talk about some of the ways they actually did try and overcome the regular usage problems. And then we'll kind of hear a bit about that, and then we'll circle back at the end and talk a bit more about different ways to solve these problems. So Lara, we'll start with you again.
Yeah, sounds good. And thank you. This has actually been great. I wish that you guys were around at all times whenever I needed you. So going back to what we were facing, we had an operator who kind of, to some extent, started to give up and started to say, our market, it's just not gonna work. We can register, we're really good at that. Activating, not so much. So we decided to get on a plane armed with all of our tactical solutions and things that we can test and research we can run. And we got there, and the numbers had started to tick up. And we're like, well, what happened? So no, we got a new CEO. What? Yeah, our new CEO actually came in and said, excuse me, this business is really important, and in fact, you guys are under-resourced, and you don't have a clear strategy, and why is no one actually using this service internally? Because we're the ambassadors. So I want a culture change. And that's what happened. And then, lots more tactical solutions followed that. There was a engagement process with customers who had balances, who had forgotten their PIN, to actually reach out and call them and understand what's going on. There was more research done around, is our value proposition right? Are we pitching ourselves to the right market? All of that happened. But most importantly, to get to that starting line, someone from senior management said, I care. And I think that now what I see when I engage with operators, and I'm sure it's the same across the industry and anywhere you look, that if I see an operator who's like, I've got a problem, and I don't feel like I've got support from senior management, I said, well, then that's your problem. If you don't feel like you have commitment behind you from the top down, if you don't feel like there's actually a vision, like we heard from PAP and from Nigeria, that you've got dynamos and, what did you call them, resurrection teams, and it shows internally there's a language of enthusiasm and commitment, then you've got a long road ahead of you. So that for that particular problem, the solution was really started internally.
So started internally, but then translated into this tactical approach that involved customers, a greater understanding.
Absolutely.
But it was really driven from the center. Great. So do you want to talk a bit more about now? And I think this relates really well to the sort of the different segmentation and understanding the people that you're working with.
And
you will be in a minute. Yeah.
Okay, sorry about that. And I completely agree with some of the opinions I've been hearing in the audience, right? It's about understanding what drives different people's needs and how do you, like you said, build that sort of loyalty and trust. So what the way we approach things is we took the problem one step up. Instead of looking at pension funds, the problem that we dug into was aging and old age, because if a retirement fund is to prepare people for aging in that moment where you don't work anymore, to really understand what people want from a pension fund, you have to understand how they view aging and becoming elderly, and also how our client viewed aging and elderly. So kind of talking to our client, we realized that they had three major assumptions about what it meant, what pension funds meant and what getting old meant to people, right? So the first assumption that they had was that people don't really care about pension funds that much. It's sort of something that's good to have, but it's not something that people want to discuss or talk about. And the reason for this is because in the past they had tried a lot of high-touch engagement. So they would have people call up customers who had just signed up for pension funds, and people would be like, oh, I don't want to talk to you, I don't have time, like this isn't important, right? So they thought that it wasn't important, and therefore had designed a much more low-touch communication. Secondly, they envisioned that retirement was about giving people freedom. It was that you've worked 9 to 5, 9 to 8 for 30 years, and now is the chance that you don't have to work anymore. You don't have to put money into your pension fund anymore. And in fact, your pension fund gives money to you, and you can do anything you want. You can go on the beach, you can travel the world, you can really spend time with your grandchildren. And that was really the way that they had, structured the messaging. So congratulations, are you looking forward to receiving this, right? And the third assumption that they had was that people thought about retirement and pension planning in a rational way, so that they looked across the market, that they were comparing interest rates, and that most of the decisions were largely financial ones. And so therefore the types of communication that were given were very scientific, data-driven, lots of graphs, lots of comparison of this chart, this fund, that fund. And so what we did is we, from kind of the quantitative data they gave us, having identified the problem, the dropouts were happening right like the decade before people were retiring. So they had, what we did was then went out and spent a lot of time with people who had pension funds aged 40 to up to 75 to understand how they view retirement, how they view aging, what were their day-to-day concerns, what were their concerns with saving. And what we found out were our clients' assumptions were perfectly true for clients who were younger. So for people the segment that we would call savers, so people who were 40 to 50, who were still in kind of the busy part of their life, who were still struggling to make a family and raise their kids and pay off loans on their mortgages and college. These were people that really didn't, I would be in this segment right now, for example. I really don't want to care that much about my pension fund, right? I know I have one, and that's enough for me right now. If you call me, I don't want to talk about it. And that's the least of my concerns, because there are so many things in front of you. What we found out actually then was that as people approach 55, and the older and older they get, retirement and aging, it becomes something a lot less abstract and much more visceral, right? You start to feel it in your body. There's a lot of signs and physical signs that are reminding people that, hey, I'm aging. There's a lot of things in their daily life that their kids have moved out, and that's no longer a source of stress and pressure, and they've reached the peak of their career, and there's not really a lot of chance to advance anymore. And so all this mind and space, then they start to think, what is the next step? What do I do after? And what we found out was, to them, retirement wasn't seen as freedom. It was kind of seen as this thing that caused a lot of anxiety. It was a feeling of loss of control. It was all this blank space, and how do I fill in? So I remember one of the people that we met, Soren, he had been a car mechanic for many years and had approached retirement. And instead of spending those 8 hours a day not having to be in the garage doing whatever he wants, he sort of recreated for himself the structure that he had existed before. So he would get up at the same time, leave the house at 8, and go to the park or whatever, but keep himself busy, and then still go home at 5, and then some sort of trying to maintain that normality. So from there we found that there were three ways that what people needed and viewed from pension funds. First of all, that it's when you approach the age of 55 and above, it becomes something that's of high interest. People care about it. The second one is that it's not about control. It's not about freedom. It's about getting control. It's about planning. It's about knowing your options. And the lastly is that they don't want rational choice. In fact, it's a very emotional decision, and what they need at this stage is a lot of help and coaching and guidance, and someone to sort of be on the journey with them and sort of talk them through this very complicated and emotional process. And so from those three insights, we sort of redeveloped a new engagement model for climate. Would you like me to go into that?
Yeah, I think briefly that would be great.
All right, so briefly go into that. And a lot of what we did then was about kind of shuffling the resources. So where, like, following the last panel discussion we had about high touch, low touch, where to put high touch, where to put low touch. So what they had originally been doing was putting a lot of high touch in the acquisition, and what we said was, no, actually there you can have a relatively, obviously still communicate that and provide funding for people, options for people, but a lot of the high touch needs to come starting from 55 when people are nearing retirement. And what we designed was a 3-step meeting where first you give people the overview of what's going to happen to you in 10 years, and then go through the concrete options with them, and then lay out their retirement payment plan. And all this happens much closer to retirement than at the beginning when you're 25 and you really don't want to hear about this, right? And the second of all is change the way to communicate with people. So earlier I talked about how a lot of their clients were a lot better at convincing customers to consolidate funds into their account, and our client was not very good. And so it's not possible to always consolidate all the funds into one account, because there are some that have regulatory issues, some that have government funds, for example, that have a much higher interest rates that you won't be able to compete with. So what we designed for our client was kind of a communication model. So we designed a back-end tool for them to analyze which of clients' funds should and could be transferred to ours, and also designed a communication model that had like a red light signal. So if this fund is red light, that means that you shouldn't transfer. If it's green light, it means that you should definitely transfer to ours because this is the benefits. And if it's yellow, then we can debate about it. And also hired a lot of new coaching staff to help walk our client through this process. So really, like you said, not just give them scientific information or data, but truly become a coach or someone that can walk them through this complicated process and help them plan for the future and provide guidance and counseling.
Okay.
And
I think that's fantastic.
Yeah, okay.
I think, again, to kind of summarize, what you did is you went in there, you removed the assumptions or questioned the assumptions that they had been making about their customers, looked again, gained a greater understanding, looked at how different different segments of the customer thought in different ways. And this is particularly pertinent because it's such an emotional decision. It's such a big decision for people, such a big part of people's lives, which obviously is very specific to this particular context, but I think is applicable in any situation. People invest a lot of thought and energy and emotion in managing their finances. So that was a great example. So Dori, do you want to talk a bit about your solutions in the Philippines?
Yes, I already mentioned that we had a savings mobilization initiative with the Grameen Foundation. And the first findings that we had is that the loan officer is not effective in mobilizing savings. So during the partnership with Grameen Foundation, we hired a savings officer and customer savings officer who who were trained to become the savings mobilizer of the bank. And through the partnership, Grameen Foundation brought experts who would help us in improving on other areas and really increasing deposits and increasing depositors. So part of the engagement resulted into having like a viability model per a savings officer. So we had that, and then we developed a new training module for the savings officers, and we're implementing that now. And they also brought other experts, like a DS42. Incidentally, Katie was here.
No coincidence.
And they taught us how to use the RCT, the Random Control Trial, which we readily pilot tested in 3 branches. And during that trial, we improved on the savings forms. And I think the very important input there is the depositors who would sign up for a deposit would state the purpose of why she would like to save. And I think that was a commitment that they signed, and they are reminded, voluntarily reminded, but part also of that is we send SMS to remind them of the commitment that they had. And then we also improved on the motivation to save during the trial. And the result was, if we compare the control group with the other branches, the savings activity is higher in the branches where we implemented the RCT. Like generally the savings activity is about 40%, but in the trial group, it's more than 55%. The average savings is also higher. The average savings and the number of new depositors is also higher in the pilot branches. So we are encouraged by it, and we would like to roll it out in some more branches in order to test, especially considering we operate in different regions, so we'd like to test that also. And part also of the trial is the use of a savings calendar, where clients are given a calendar and they track their savings. So those things were we learned in order to observe a change in behavior in the deposits and savings mobilization. And we're seeing some changes in the behavior of the depositors.
Cool. Thank you very much. So again, to summarize, a couple of different approaches there. One is retraining your agents, and another is the work that we helped you with to change the forms that people used when they signed up for accounts to set goals, and then give them some reminders through a calendar that makes their savings goals very salient, and some SMS messages. So a number of different approaches there with some very encouraging results, which is fantastic to hear. So I just wanted to kind of bring it back now to a sort of move on to a behavioral angle, actually, some of the work that we do, which kind of fits nicely. A lot of the things that we've heard about today, I mean, some of them are very much structural, some of them are more about kind of audience segmentation or client segmentation. But many of the things we've heard about, like making it easier for people to make regular deposits, or you know, in your case, kind of reminders, actually comes back to the work that we do at Ideas 42, which is understanding people's behavior in the real world. So, you know, I kind of touched on at the beginning the fact that we can all have these intentions and not necessarily follow through on them. And if we can't do it, how can we expect our clients to? But there are some really, really simple devices that can actually be used that aren't necessarily intensive. You know, they're not high touch, they're very low touch. They're often just tweaking existing things like changing forms that you already use that can actually have a significant difference. But the absolute key here, I think, to the work that we do is understanding the context, understanding the lives of the people that we are seeking to influence and the behavior that we're seeking to change, and then making tweaks and changes to take that into account. And, you know, we will always test things to check whether or not that works. But it's really interesting to hear how so many of the solutions do kind of talk to behavioral economics and an understanding of the realities of human behavior. You know, like you've talked about, people aren't necessarily rational when they're thinking about their finances. They sometimes make decisions that aren't in their own best interests. And how do we help them make better decisions? And it's a fascinating area and one that's hugely relevant, I think, to this space. So, I mean, I think we've heard quite a lot about particular problems in different areas. We've heard a lot about solutions. And when we have a bit of time left, and I'd just like to open it again to the floor, just to see if anyone has any kind of further thoughts, any further input, suggestions, questions that they would like to ask. Yeah, one at the front, right down here. Who can get there first?
My question is to Dori. We have heard all the success stories, the wonderful way you have done what you set out to do, turn an NGO into a bank, and this is a great success story. But what were the hitches that you met with? I would think management would be one, because in transition from the informal banking to formal banking, what have you done with the employees? How did they react to it? So there would be one issue here. And then the second thing was in your now that you're operating as a bank, what are some of the problems that you're facing?
Yep. In terms of training the management, before we open the bank, we send our staff to an exposure or a hands-on training with a commercial bank, because we thought that we are putting the microfinance operations inside the banking structure, and we must understand how to run a regular banking institution and then put microfinance in there. So we immersed into a commercial bank and a rural bank as well in order to learn the rigorous banking practices. And then we strategize a lot how the microfinance scheme will be put into the banking structure without destroying anything, especially our relationship with the clients, our connections with the members, with the clients. So we protected that in every move and in every step that we made. And then in terms of, the second is on the problems that we face, of course, regulation. There are many regulatory or many regulations that does not fit microfinance. So a lot of lobbying has to happen, and we have to be bold enough in lobbying with our Banco Central initially, because initially they treat us as a regular bank. So we told them, no, please, we are a microfinance-oriented bank. We don't ask collateral, but their payment rate is very high. So that's the beginning of, changing the mindset also of the examiners especially, because they're the front line of the Banco Central. So we did a lot of voluntary training with the Banco Central. And we were assisted by the other microfinance institutions in the Philippines, because we have a coalition then at that time. And we were assisted by them in terms of orienting the Banco Central. So another is on the discipline of the staff, because as an NGO, the skills and the discipline of the staff. For example, if in a center meeting, we can address a woman with aling Dori. Aling is respect for a rural woman. But we realized that in a counter of a formal bank, we cannot do that, because the bank is open to the general public, and if they see like For example, a teacher addressed with Aling, it's, they sometimes turn them off. So we have to adjust also, and a lot of positive improvements has happened. Our staff became more professionals in terms of dealing with clients, and even though they are pushing for loans, they also become promoter of the savings products at the same time.
Thank you very much. Question right at the front here.
This is really a question for Lara. I'm really interested, and let's put M-Pesa aside and maybe even M-Shwari in the Kenya market, but I'm interested in understanding better. In the mobile network operators who are introducing mobile banking, where has usage been most effective? So beyond uptake, and in your view, for what reasons? So that's a very kind of general, but just, and perhaps more specifically in sub-Saharan Africa.
And sorry, just to clarify, you mean usage rather than sort of registration?
No, I mean beyond, so just uptake, but continued effective usage along mobile banking services. So really what mobile money for the unbanked is seeking to address, but I'm interested in the cases where it's actually working beyond M-Pesa.
Yeah, so there's a lot of them. They're growing. So even within and outside of sub-Saharan Africa, we've got 13 services that have more than 1 million customers, and we've got, I think next year, as of last year and next year, we're seeing more and more cross that line. We don't have the number yet, but we will very soon. It's interesting. So I think that the keys for success, the ones that are consistently successful, do a couple of things. So as I say, the first is kind of starting in home. We talk about client centricity, but the first thing to do is care about your client, and which means that you're going to put resources to understand what they want, what they need, and what products work. And so that's honestly one of the things across every one that is gaining traction, every one that is seeing success in any kind of way, momentum. It starts there. It starts that actually things even internally, like a lot of the salaries of some organizations will be paid by the mobile money, which generates internal enthusiasm about what this product is and explaining it, and importance to it. So that's what happens internally. The other part is that it's a real slick understanding of what the customer experience is. So operators, in some ways, are quite constrained as to what channels they can use. They really have USSD and they have an STK, which are just the two interfaces that they can play with. So they can't do lots and lots of product design and iterations and how does it feel, and I'm going to prototype. They're really constrained, which means everything else has to be slick. The agent has to be slick, the value proposition has to be slick, the customer segmentation has to be slick. And so what we say is that, okay, so look at those three areas. What's your value proposition? Is the segment interesting enough? Can you speak to them, and do they trust you, even as an operator? If they can, great, then that's 10% of your work done. The other 90% is going to be you making an operation that allows you to build on that momentum. So I think that the value proposition and the technology are the enablers, and then the rest of their emphasis is really spent on how do I make my agents match that expectation? How do I make my back office, answer their questions, meet their needs, create their accounts, so that every moment the customer interacts with the service, that trust is gradually being built, and then they want to tell their friends. And so it's really where the network effect kicks in. And to be honest, that's where we see a lot of diversity. So some operators sort of say, oh, it happens organically, and we kick back, and they tell their friends, they make their calls, and we watch it happen. Others play with loyalty programs or incentive models for customers or agents. And they find that triggers it more. So that is actually somewhere I don't feel comfortable saying there is best practice to drive those network effects. But there's lots of triggers along the way that operators are testing and trying, and that will vary according to market context. But yeah, the operational slickness and the value proposition are kind of really core. Does that?
It does.
Starts to.
It starts. That's great. But just a quick follow-up question. Sorry. How many in the next 5 years do you think, beyond the 13? So just your best guess.
That's a big question.
Yeah, just give it a shot.
Can I take off my microphone?
There'll be a different answer later.
Can no one tweet this?
That's a very good behavioral thing.
You know what I'm going to do? I'm going to let Strive answer this for me. I think 75% of Africa will be using access to banking via mobile account at some point in the future. That's what I want to see, because that's where we are with mobile penetration. I mean, anybody who has a mobile phone should be able to have access to an account. I would love to see that. Wow. So if I'm going to put it more pragmatically in the short term, I am seeing on the ground an increasing momentum. So 2 years ago when I joined MMU, a lot of the work we did was really on foundational issues. How do I set up a master agent model? How do I manage my liquidity? How do I do this customer research? Now, those questions are fewer and far between, and it's a lot more like, all right, how do I think about partnerships? How do I think about strategy going forward? And for me, that's a really good indicator that we're no longer focused on the foundational issues quite as much as we used to be. Liquidity management is slicker, the agents are slicker, the marketing is slicker, the BTL strategy is slicker. So I think that we will start to see, almost like the knowledge is meaning that the learning curve now, more operators are getting to the top of it.
And this slickness translates into a better service for the customers, right? And
yes,
understanding what they mean. That's fine. I'm always going to bring it back to the customers. Great. So who else would like to comment or have a question? I've got one down at the front here.
So listening to you ladies, each of you presented a different problem that you resolved. I'm curious to know whether it's a challenge or whether it's an outcome, what is the one thing that surprised you most?
What's the one thing that surprised you most? It's a great question. And I assume you mean the one thing that surprised them in terms of solutions that worked that they didn't expect to work, or solutions that didn't work that they expected to. I think I've got that the right way around. Is that what you meant? Yeah? Fantastic. Okay. Who wants to jump in? Keep talking.
I think one thing that surprised me the most in this project, and usually a lot of projects, is often how simple the solution is. So I've been hearing a lot about, Dora, your experiences, and Lara, your experiences when you're doing something new in a new market, right, and setting up either a new startup or a new NGO. In that context, of course, it makes a lot of sense to basically, what I'm hearing is try everything. You try on the client side, you try to motivate people better, you try to make sure that they know better, you try to make sure that they're updated. You try to make sure that your staff is aware, that your staff is motivated, and you try to cut costs. You try to do everything, and obviously a combination of those things will work. What happens when the market becomes a bit more mature, maybe when we're having these conversations in 5 years in mobile money, is that when you have tried everything and it seems like one thing is still not working, how do you isolate the problem? And that I think is the problem that our client is facing. So they're experts, they've been in pension funds for so long, and they think that they know the product and the customer so well, and how simple it is that when we went back to the very original, that their staff and their client, what they thought about pension funds, their assumptions about people, their assumptions about aging were wrong and were misguided. And when that mindset shift has changed, and it really allows for a clear value proposition for the organization and a clear direction, how clear the solutions can be. So I didn't get to say earlier, but based on those type of things that we presented, the pension fund has piloted 2 of our programs. So the focus on helping customers pool together all their funds and focusing on the planning, and that has led to like almost a 70 to 80% drop in dropout rates. Wow. So that was the most surprising to me.
Cool, thank you. Dora?
Because I work with the very poor and rural women in the Philippines, I was always surprised. Every day of my life, I was surprised of their ingenuity, their skills, their talent. They're very hardworking, and I am always surprised by the outcome of the work that the women are doing every day of their life. For example, a very destitute woman would come and join our bank. Initially, we will teach him how to make candies using 5 kilos of sugar every day. Now that woman is making candies out of 75 sacks of sugar every day. She has a candy factory, but she was destitute. So I think that really is a big, big surprise for a worker like me.
I think my surprise is actually going to go, one of the things that's taken me back, been surprising to me in the last 12 months, is actually seeing, it's more at the industry level, and seeing the number of turnaround stories that we're seeing amongst operators. And I think it speaks to the fact that this isn't, even if you haven't figured it out yet, it doesn't mean that you're not close or that it won't work in future. And so I think that applies across industries, that there's an element of iteration that needs to happen, an element of learning that needs to happen, but it's not doomed. And we can, and as soon as you do hit that, something that resonates with that customer and deliver it in a way that is reliable and responsible, then it does take off and it works.
Brilliant, thank you. Anybody else? Any other questions? No, I don't think so. Okay, so with that, I think we're going to wrap up. I think it's going to be one of the few sessions that has ended earlier rather than later. But given that it's drinks next, I'm sure you're not going to complain about that too much. So thank you very much indeed for your insights today and for staying with us. I mean, I think, you know, I just want to come back to what we talked about at the beginning. You voted on the different challenges that can be faced in increasing regular usage. And I think that we've shown that, you know, or what we've heard is that actually they all pose problems, but they're challenges that can be overcome. So we can have a better understanding of our clients that can lead to regular usage, which was the problem that most of you identified as being the biggest one. But also we can see that organizational priorities can shift, which can result in more regular usage. And, you know, I think it just speaks to the fact that this is something that we need to put a lot of attention on. We need to focus on usage. Obviously, there's been a lot of talk about uptake. Usage is absolutely essential. There's no one answer to the question how to increase usage. There are a number of different solutions. And one of the absolutely crucial things is understanding your customers and then testing and learning, you know, as Lara said. And, you know, we've heard a lot. It's iterating. It's seeing some things do work, some things don't work. Let's build on this. Let's build an understanding and move on from there. And I'm sure that, you know, some of the things that we've heard and shared here in the room today will be incredibly useful for us as we go back and try and, you know, increase usage in our own kind of contexts. Mine will be going to the gym more often. So with that, I would like to say a very big thanks to the panelists for spending their time and sharing their insights with us. And thank you for you guys, and have a great evening.